What's up everyone, I'm your host Edward, and on this channel I talk about stocks and crypto news. So if that's something you're interested in, feel free to subscribe and hit that notification bell so you can see my videos every single week. And don't forget to hit that like button down below for the YouTube algorithm. But yeah, today's video is going to be a little bit different because there isn't really any news that I want to get into, but I want to educate people on Bitcoin and why it is super important. And yeah, there's a lot that I really want to get into, so let's not waste any more time and let's just dive right in. So this video is going to be more for beginners, and I'm going to go through the history of money and why it is important, and I'm going to lead it all the way to Bitcoin. So first we have to understand what is money. Money is pretty much a medium of exchange. So one individual will give money to another individual for a good or a service. But one thing people have to keep in mind is that there has to be a belief system in it, meaning the two human beings have to believe that the medium of exchange is worth something. And in the beginning of civilization, human beings use seashells and stones to preserve their wealth, and one main characteristic between the two is that it doesn't decay easily, because no one in the past will want to put their wealth into apples because it will rot within like 3 weeks, and people don't want to see their money rot that quickly, right? So that's why seashells and stones were super important. And another characteristic of the medium of exchange in the past was that it was really hard to produce, and it was something that wasn't easily replicated, and there was actually a limited supply of it, which in the end makes it more valuable. Basic demand and supply. Now here's the ugly part of history and money. So I'm gonna use the Roman Empire for example because it was probably one of the most labor intensive civilizations of all mankind, and the reason why the Roman Empire kind of fell was a lot of reasons, but here's the main points, right? Government corruption and massive unemployment and inflation. And the thing was, Julius Caesar was so corrupted to the point where he started to debase their coins. And what does this mean, right? So pretty much a coin has a certain ratio of precious metals inside of it. However, right, Julius Caesar and the government decided to put less and less precious material within these coins so that they can save more precious metals and create more new coins. So why is this a bad thing, right? The thing is, the more supply of money within the country, then the citizens within that country will have less demand for that currency, meaning you're gonna have to pay more dollars to buy a piece of bread. And this is pretty much one of the reasons why the Roman Empire fell. And eventually, right, most of the citizens started to move out of the Roman Empire because they realized that the government was corrupted and that their money was losing purchasing power and value. But obviously, right, there's also other reasons why the Roman Empire failed, and this is a great example of fiat currency. And fiat currency means the currency and the money supply is controlled by the government, and the government will decide how much money supply should be within the country and try to manipulate inflation and etc. Now going through a little bit of history, right, all of these eras failed because of monetary policy, and no country actually stayed in power forever. And a lot of economists around the world are saying that it's all due to the monetary policy, where these governments manipulated their currency and started to print more of it. But during these eras, one great revolution occurs. During the Renaissance, right, we got Leonardo da Vinci and Michelangelo that created the Mona Lisa and David. And during the scientific revolution, we got Sir Isaac Newton and physics. And then during the Romantic era, right, we got, classical music like Mozart, Beethoven, and etc. But funny enough, right, at the beginning of these eras, everything goes well until the end, and usually these revolutions and ages last for about 250 years on average. And looking into this page, these are all the examples of failed currencies because these governments decided to print way too much, and they required like millions of their own dollars to buy a piece of bread. And if history tells us something, right, then it's not looking too great right now for our current situation. I'm gonna get to that very soon. And the reason why everyone loved gold is because it doesn't decay at all, and it's been living out throughout centuries. Now the thing is, we took all the gold in the world, melted it down, and made pure gold with it, then it's worth $11 trillion. And the gold was a really great asset to put your money into because there was a limited supply of it, and not a lot of gold comes into the world every single year because miners have to dig for it, and it's not really easy to find gold. And remember the two characteristics characteristics, right? It doesn't decay and it's very hard to produce or hard to find, meaning it's hard money. But moving forward to the Great Depression, right? During that time, the United States was still on the gold standard, and the gold standard pretty much means USA owns about this much gold, and that amount of gold that they have in their bank is the money supply within their country. But during the Great Depression, right, people didn't have money, and gold itself is limited in supply, so they can't really, print any money. So they decide to get off the gold standard so that they can manipulate the money supply within their country. And spoiler alert, I don't like the Keynesian economic theory, but they believe that one of the best way to fight off economic downturn is to inflate the money supply. So the problem with inflating the money supply is that you're devaluing your own dollar, and that the purchasing power of your whole country just decreases. And it's the total opposite of gold. But during the Great Depression, right, people didn't have money and they couldn't really buy anything, and a lot of people starved to death, and this was their best solution. And once they got off the gold standard, right, they started printing millions of dollars, because it's like taking a drug, right? It's like stimulus, and it just makes you feel better, and the government is addicted to this. But what really put the nail in the coffin was Richard Nixon back in August 15th, 1971, where he announced that the United States will no longer convert their dollars to gold at fixed value, which completely abandons the gold standard. So let's look at the characteristics of the US dollar, right? It's a paper bill, right, that can definitely easily decay if not stored properly. And the second characteristic, right, is it hard money? Well, if you ask me, right, printing money is pretty easy, because if you're trying to look for gold, you have to physically kind of dig for it. And note this, the money supply for the USD is unlimited, which differs from gold, right, because there's a fixed supply of gold, and not a lot of gold gets mined every year. And a little bit back in history, right, 1898 was when the United States became a superpower. And the thing is, most superpowers only last 250 years. So a lot of people are speculating right now that is America's expiration date nearing. And with the amount of money that they're printing, right, and if we go into this chart, it is pretty alarming, to be completely honest. And we saw what happened in 2020, right, because of the pandemic, and the Fed had to do quantitative easing so that the whole entire stock market and companies don't collapse. That's why a lot of free money was getting sent out to everybody. But the bad thing is that the dollar just loses more value. And if we look here, since 1913, the dollar pretty much lost about 96% of its value. That means today's dollar would be worth less than 4 cents back in 1913. That's why there's a saying, right? The rich gets richer and the poor gets poorer. Because the average person out there just saves their money, but they don't really put that into assets that appreciates in value. And because our monetary policy inflates because of the money printer, then people have to find a way to store their money into different assets that grows in value, like stocks and bonds. But bonds are pretty much trash now, and I'm not going to dive too deep into that. But it's crazy, right? Back in like the 1800s, no one's pretty much buying stocks. So how did the average human save their money? Well, that's because they were on the gold standard. But fast forward to today, right? More than 50% of Americans are living paycheck to paycheck. They have literally no savings at all, and a lot of people are in debt. And by this point, right, I hope people are kind of looping everything together and connecting the dots. But it's just sad, right? Everyone has a full-time job, but they also have to become a part-time investor. That's just messed up. And the purpose of investing your money is to make sure it doesn't decrease in value, and that you're fighting against inflation, and that your dollars are making you more dollars. But with Bitcoin, savers win, but investors also win as well. There will only ever be 21 million Bitcoins in the world, and right now the total existing supply is at 18 million. So there's about 2.1 million Bitcoins left to be mined. And right now there's 900 new Bitcoins per day, but this gets cut in half every 4 years, meaning it's harder and harder to mine Bitcoin. And that's the rule of hard money, like I explained earlier. And Bitcoin is all digital, so it doesn't decay as well. And because Bitcoin's network is open software, right, no one can hack it. And Bitcoin was revolutionary, right, because within our digital, world, anyone can just copy and paste anything. But after the economic recession back in 2008, Satoshi Nakamoto created something called Bitcoin in 2009. and it's pretty much a new invention. And Satoshi figured out a way to create Bitcoins without it getting, copy and pasted on their network. But I'm not going to dive too deep into the tech of Bitcoin. The purpose of this video is just to kind of show you how bad fiat currencies are. And fiat currencies, again, is pretty much currencies that are controlled by the government. And back in 2008, the government's kids, or you can call it the Fed's kids, which are the investment banks, literally played with people's money and caused the whole entire recession. And it's such a coincidence that, Bitcoin was created right after it. But yeah, I highly recommend you to read the book called Bitcoin Standard if you really want to understand more about Bitcoin. And obviously, right, I want you to do additional research on the tech behind Bitcoin. A lot of new innovation is being created, and Bitcoin is still in its early stages. And the reason why Bitcoin is very volatile is because the technology is still not matured yet. And the greatest asset that you could have invested in from 2010 to 2020 was Bitcoin. And if you don't believe me, search that up on Google and you'll figure out why. But yeah, that wraps up for this video. I definitely missed out on, a lot of key points, but I hope this is a great introduction into Bitcoin. And if you're interested in buying crypto, please head into my referral links in the description box down below, and we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm. And if you haven't already, feel free to subscribe and hit that notification bell so you can see my videos every single week. That's pretty much it, and I'll see you on the next video. Peace.